How's it going, guys? This is Forensic Forex with Deontay, and I'm back in another video. This is going to be your daily update on GU, so British Pound versus US dollar. So since this is going to be the beginning of the month, there's a lot of things I have to talk about before making the videos very short and concise, because there's a lot of homework that I do right before going into the month. So first things first, IPTA, got to get it out the way. So I'm starting at the beginning of the month. I'm counting back 20 days, 40 days, and 60 days. And hopefully I did that correct. I'm going to double check. So this is 20. It should be 20. That should be 40. Yep. And then this should be 60. So perfect. After that, I find the highest high and the lowest low in each one of those quadrants. So that's the 20-day high here. That's the 20-day low here. That's the 40-day high up here. You can't see it because it's blended in with the 60-day high, almost equal highs here. We have the 40-day low, and then we have the 60-day low. Anything above here is going to be open float or going to be liquidity. So that's buy side liquidity. So anybody that was selling has a protective stop loss above these highs. Anybody that was buying from these rallies up have a protective stop loss below the lows. Yes, this 60-day low has been mitigated already, so there's not going to be much sell side liquidity here. It's just going to act as a significant level, an old low. 40-day low, there's sell side liquidity below it, and 20-day low, there's sell side liquidity below it as well. Even this low here, that's in front of the 20-day low here, there is sell side liquidity here. So any of these right here as well, buy side liquidity, buy side liquidity, buy side liquidity, right? It doesn't have to be the actual IPTA high or low to have liquidity above it or below it. After that, I come down to the monthly opening price. So March's opening price will be fair value. Any opening price to any candle is fair value, whether that's the daily opening price for the candle, whether that's the weekly candle opening price, whether that's the 4-hour, the hourly, 30-minute. The opening price is always going to be fair value. Once price moves above fair value, you're going into a premium. And once price moves below fair value, you're going into a discount. High odd sell scenarios normally form above the opening price, and high odd buy scenarios normally form below the opening price. Now it's up to me as a trader to speculate whether or not this monthly candle is going to draw up or draw down. Now, there are many ways you can go about it. My simplest way to do it is to read price action. If you've been doing it long enough, you understand certain things to look at. When the market makers step in, they leave fingerprints everywhere, and they tell you exactly where they want price to go. You can see here, this is a huge fingerprint. This fair value gap here, this SIBI, sell side inefficiency, buy side imbalance. You can see how price runs back into the fingerprint and then looks to try and run lower, but then they start engineering these equal lows again. Now, I'm using macroeconomics to either further my understanding of where price should go. My simplest way, because there's a plethora of ways that I go about it, but I want to keep it concise for people to understand as well. What I've been taught and what I've been studying, because like I said, you got to do your own due diligence. Don't take anybody's word full-heartedly. Take it with a grain of salt. Go do your research. Looking at the seasonal chart, you can see for January, it shows that it went up overall. February, it goes down. Let's look at the chart. Look at January, it goes up. February goes down. Then we do consolidate towards the end here. But so far, it checked those boxes off for the seasonal chart. January up, February down. March, it's telling us that it's supposed to go down, then move sideways. That doesn't mean now it's easy. The seasonal charts, just tell me exactly what to look for the entire year out of 12 months. That's not true, because there are times where the price action does not align with the seasonal chart. There's times where the seasonal chart is telling you it's supposed to go up for this month, but price action actually drops and distributes lower for the entire month. It happens. So it's not just an easy, foolproof way to understand, okay, I should suspect March is going to drop down. No, I need price action to show me signs that it wants to go lower. Now, with that information of the seasonal charts, just that solely alone, because there are other things that I use, but just with that solely alone, I'm starting to formulate a storyline in my head. Okay, it's telling me price action should most likely draw down for the rest of the month for March and then move sideways. If I was the market maker, if Deontay was the market maker, how would I move the price action? Well, I would tell you, I would move price above the opening price into a premium. I'll get all the retail traders to think that price action is bullish. They think that British pound is getting strong and dollars getting weak. That's what I would suspect. Price comes up. Then they pull price down. I pull price down. Like I said, if I was the market, I pull price back down into my intended direction. So I want to get traders on the wrong side above here. Everyone's buying here. Oh, it's breaking out. It's breaking out. It's breaking out. And then all of a sudden it just crumbles on them, right? And it takes out sell side liquidity. That is one scenario. I'm not sitting here and saying that that scenario is the one or be all, because that may not be the case. I could be totally wrong about that. I'm just taking a guess and taking an educated guess on how price action forms each month and each day and each week. If it's not going to do that, odds are it comes down, right? Takes out the 20-day, hits into the significant level of 60-day, and even potentially runs out the 40-day, right? Takes out all the sell side liquidity. Then it turns back around, runs back up, takes out swing high. So any of these swing highs have buy side liquidity. So they run back up one more time. So to get retail traders to go short, then they run their stops again. Then retail traders get out their shorts. They go long now, and then they finally drop price action for the month of March. That could be a potential scenario. Or doesn't at all follow the seasonal tendency at all. Price comes down and then just keeps running back up to the 20-day high. But to get to the 20-day high, that would be, from the opening price at least, over 400 pips. Now, do I think that price action is going to run 400 pips back to the 20-day high? I don't think so. Is it out of the question? No, it's not, because it can happen. I don't control the price action, but I need to read it, and then I need to then infer whether or not I need to jump in long or jump in short. All based on this. This is going to help me find my best buys and my best sells for the month. Look at February. Look at the opening price here. Look at how price opens here, runs up, and then it drops. They get everybody to most likely go long. Retail traders think pound is getting strong, dollar is getting weak, runs up, goes down. Look at January. Opening price for Jan. Oh, that's not the opening price. Let's get the opening price. I'll show you the opening prices. Here, the second, yes. So it's up here. That's the opening price for January 2nd. Because the first was a holiday, New Year's. Price comes what? Down into a discount below it. Get everybody to think British pound is getting weak and dollar's getting strong. And what do? They push it up. Dollar gets weak, pound gets strong again. That's what they're doing. Every month, they're playing games with you guys. Every month, they're doing this. And that's what I'm suspecting for March. I'm doing the same thing. I'm taking these core principles and applying it to each month. And then I'm using other data to help me speculate whether or not price should be going up or down. So enough of this. We're going to jump right into this. This is what you guys are going to be mainly seeing for the daily gold. So used to saying gold. The daily British pound updates. This is the opening price here. And like I said, there's buy side liquidity here, buy side liquidity here. Obvious buy side liquidity here. It's equal highs. Obvious sell side liquidity down here. It's equal lows. Same thing here. Same thing here. We got the hour indic levels. We got 1.2 big figure. We got 1.220. We got 1.250. And then we got 1.180. Right? We got some algorithmic numbers that the institutions are either going to sponsor their buys or sells, or they're going to exit their trades and take profit. So I have these marked off. If price was going to go lower, I want it to reach here. Right? Overall, if the trend is continuing to drop lower, I want it to get down here. And then after that, what level would I want it to reach for? Because people are going to ask. I know people are going to ask. 1.150. I'll put that in as well. Right down there. You got to scrunch the chart up a little bit. So we have that major PD array that we see here. Right? That's the footprint. That's the fingerprint. Get it? That fingerprint that the commercials are getting into the market. Because when they get into the market, it's loud. It's very loud. It's so apparent. It's the elephant in the room. But when we step into the market, it's quiet. Nobody really realizes that we're in the room. But when they step into the market, you see things like that. You get those large candles. That's institutional sponsorship. You can see instantly that someone stepped into the market to push this candle all the way down with speed. Price runs back up into it and then drops lower. Now, many people may say, "Oh, what about the wicks? It's outside of it." We're not concerned about the wicks, because if we were to study price action without the wicks, then it looks completely different. You can see the body is residing inside the fingerprint. Let me take this off. I'm gonna go back. So right now, what I'm suspecting is some type of power 3 play: accumulation, manipulation, distribution. Let's just go back to that one more time. They're going to accumulate the orders at the beginning of the month, then they're going to manipulate traders on the wrong side, then they're going to distribute. That's your accumulation, manipulation, distribution. That's normally occurring on all higher time frames, whether that's the daily, weekly, or monthly, and the yearly chart. It's going to happen on the monthly candle as well. All these ideologies are fractal. So far, I'm going to suspect that price is moving sideways. It's soon going to give a big push either to the upside or downside with a large range candle. Then I will be able to formulate whether or not price action is most likely going to keep drawing lower or higher. Right now, it's very too early to suspect anything, but like I said, we do have this PDA right here, quote unquote retail logic, acting as what? Resistance. But it's not a random box that I drew randomly. I'm like, okay, this is resistance. No, I'm taking certain measures. That's a measure in price. And then I'm going to suspect whether or not, if it's going to respect this and then run lower, or it respects this but runs out the liquidity above the highs here, runs back up close to 1.220, and then it comes back down, taking out the sell side liquidity. I'd also have to compare the dollar index as well, right? I have to look at other inversely correlated pairs and correlated pairs. What is EU doing? What is AU doing? What is NU doing? What is the dollar index doing? What is gold doing? What is UCAD doing? Inversely correlated pairs as well are very important. It should be moving inverse to what GU is doing. So what I mainly like to do, I like to compare British pound and UJ together. I like to do that. So if I see UJ rallying up, I should suspect GU rallying down. If it's not doing that, there's a crack in code. Something is wrong. Either one market is being held and manipulated much more, and they're increasing net longs or net shorts and holding price up, or holding price from falling down. Because if GU, right, is supposed to go higher, and UJ broke a high. Let's say UJ ran up. Let's say this is a high. UJ ran up and broke a high. Well, that means GU should have ran down and broke a low. But if it doesn't do that, and it looks like it's being held up, that means that this is just a run on buy side liquidity to then go short on UJ, and them holding price up is just them increasing their net longs to then push price higher. That's all it is, an SMT diversion. But I'm not going to get too into a lot of concepts. I want to keep it simple. The daily updates are supposed to be quick, concise, 2-3 minute videos, and you guys get my perspective of where I think the market is going for the month. Like I said, I may not be right. I could be totally wrong. But it's just me putting myself out there, telling you how I'm going about it and putting my perspective out there for the trading community. So overall, hopefully you found this insightful. Peace.